Hi there, very good morning and wishing all our viewers a very happy Ganesh Chaturthi. Well, we have festive spirit going on in Mumbai, but there's a major shift in global trade dynamics which is unfolding today. The United States has officially implemented a sweeping 50% tariff on Indian exports. Now, in just a few moments from now, 50% tariffs on Indian exports to the United States will come into effect. Now, yesterday, the U.S. Department of Homeland Security, they had confirmed that new measures will take effect from 9:30 a.m. Indian time. That is just in a few moments from now. Now, starting today, thousands of Indian goods spanning textiles, gems and jewelry, shrimps, they're now facing a steep rise in tariff rates when entering the U.S. market. Now, this escalation in trade nations between the two global nations is a big story of the day. And to discuss this further, joining us now is Ajay Sahai, DG and CEO, Federation of Indian Export Organizations. And we also have with him Rajiv Agarwal, who's from Doordarshi India Fund. Thank you so much, gentlemen, for joining us today. A very good morning and wishing you a very happy Ganesh Chaturthi as well. Of course, the biggest headline after this hour is the tariff that Trump has implemented on India. It becomes effective just in about a minute. Rajiv sir, let me come to you first. What are your first thoughts? Were you expecting some kind of extension? Trump has extended the deadline for, even the European Union that happened in the past before they got that 15% rate. But for India, this deadline was fixed for August 27th, and talks were supposed to happen between India and US on the 25th, but they have been deferred and no new date has been announced. So was this anticipated? Has the market, already priced in that August 27th was going to be the deadline, or are we going to see a knee-jerk reaction tomorrow?
Yeah, good morning. No, I think what has happened with the India-US trade negotiations is slightly different than most other countries. And the difference in my mind is that how the negotiations moved, pretty much there was no ongoing conversation that was happening after some time. So I think it seems like whatever was decided a few weeks back is really just happening based on how the time progresses. But there has been no new dialogue which would allow this situation to get alleviated. Coming to your second question about how the markets will react, the markets have digested this news because this news has been in the market for some time. And what is interesting is that both India and US seems to have moved on from this issue and worrying about other things at the moment. So I think markets already are aware of it, and so it's not a surprise. So I am not thinking that it will have a big knee-jerk reaction tomorrow.
And Ajay sir, let me come to you now. Which Indian export sectors do you believe are currently most affected by this unfavorable tariff conditions that are now in play? And what steps do you believe the government should be taking to address these challenges?
In fact, if you're looking into the sector, roughly 55% of India's exports to the US is getting impacted with high tariff of 50%, which includes sectors such as apparel and textile, footwear, handicraft, carpets, chemical product, plastics, a wide range of labor-intensive sectors. All are getting impacted because on India now the duty stands at 50%. Our competitor in South Asia and Southeast Asia, they have a duty of around 20%, and therefore the duty differential is 30%, where the competitor is Turkey or some of the European countries, the differential is 35%. And therefore, with so much differential, probably in many of the sectors, Indian exporter may not be able to retain the US market. And that's a hit which in the short term we have to be ready to take. Though, of course, in medium to long term, industry is looking into new markets. They are also looking into the vibrant domestic market. But that's a challenge which we have to live for. And our worry is that probably with so much of duty differential, we are not in a position to ask the government, because the government is not expected to provide such a huge support of around 20 to 25%, which will translate into a budget of $10 billion plus. But I think we are concerned with the stress on the industry, and therefore we would like some of the banking initiative to be rolled out for the export sector, particularly those exporting to the US. It may be a moratorium of interest and principal payment for 1 year. It may be enhancement of limits so that the cash flow continues. There may be collateral-free lending for the export sector to US, and these are some of the things which we are pursuing with the government. Government has also announced the export promotion mission in the budget. We would like the government to roll it as quickly as possible so that some positive sentiments are there for the export sector.
Okay, so that's the view coming in from Mr. Sahai. But Mr. Agarwal, let me come to you. Since we are talking sectors, could you also share your sector-wise, view when it comes to the impact of tariffs on sectors? Which sectors do you believe are going to be most hit in terms of course, the stock market impact? Tomorrow, like you've said, there's not going to be a knee-jerk reaction, but of course, we will see some kind of reaction since the tariffs are now coming into effect. They've been implemented. It's 9:33 and 9:30 was the timing when it was supposed to be implemented. So they're effectively in place now. So which sectors do you believe are likely to see the most reaction tomorrow in the markets?
Right. So I think most sectors where India and most of its competitors are very close are the ones where India's exports will get hit. And as Mr. Sahai mentioned earlier, textiles, some of the metal components, auto components, those are the things where you have close competitors. Those are the sectors that are likely to be impacted, like, agri-produce, shrimp exports especially, things like that will get impacted. But I think clearly when this whole negotiation started going awry, at that point there was a thought process that Indian producers have to find new markets. And as we know, finding new markets takes its own time. So I think there will be definitely challenges. Now, in terms of the stock market, I do believe that the stock market has accounted for some of it, but some of those things, as the numbers start deteriorating, there might still be further reaction to it. So some of these sectors which are export dependent will definitely have an impact. In terms of more of the domestic sectors, when you look at it, be it infrastructure, be it look at banking, be it capital markets, a lot of those sectors should continue to do well in our mind, because Indian economy is likely to get a boost to ensure that they can offset the impact of these tariffs. And therefore, I believe that when you are looking at the stock opportunities, one should look more at the domestic place.
So that's the view coming in from Mr. Agarwal. But we are also joined by Dhananjay Sinha, who's the co-head of equities at Systematics Group. Hi, Mr. Dhananjay. Thank you so much for joining us today. And, we were just talking about the sectors that are going to be impacted by the tariffs that come into effect today, right, as we speak. But what are your thoughts? Which sectors are you targeting? If we could talk about, say, specifically, capital goods sector, for instance, when the earnings commentary came, most of the companies said they were cautiously optimistic, especially given the, tariff uncertainty around exports. So what do you believe is going to be the reaction now when markets open tomorrow?
So I think it will be very myopic to look at the situation tomorrow, because this is an event which will have a long-lasting impact. And we think that the negotiation that is happening between India and US is something that is going to take time. It is going to be a prolonged process, and we are coming at a very high level of tariff levels. Importantly, what we have to see is that the corporate performance, if you look at domestic performance, the top line growth of non-finance companies had slowed to almost like 3.8%. So my sense is that as the full effect of the tariffication pans out, we'll need to see how it reflects going forward. As of now, it does look like, be it global exposed companies or domestic exposed companies, there is a considerable slowdown, be it consumer goods, auto sectors, even I would say even engineering goods and stuff. So all of that has actually seen a sort of a deceleration. And if you look at the market performance for the last 1 year, Nifty has been roughly flat, I would say. And barring BFSI, which is banking and NBFC sector, rest of the sectors are deeply in negative in terms of performance. So I think the effect of tariffication is partly priced in, but I would say that a full effect of the tariffication on the overall earning situation over the next few quarters, and even I would say it will have a lasting impact, because we think that even after negotiation, we are looking at a 20% tariff, 20 to 25% tariff versus an average of 3% that existed prior to Trump to resign. So I think it will have a lasting impact. I think the government of India is actually trying to galvanize this to some extent or neutralize this to some extent through the GST reforms and GST cuts, etc. The RBI has cut rates, and earlier the government had actually provided some measures through employment linked scheme and other things. So I think we are, as one of your panelists said, we are more inclined towards favoring domestic plays. I think eventually the household situation is what the government is trying to address, and real income for households at various levels has not really grown. So I think all these measures are sort of impetus for domestic consumption plays. So I would say that domestic consumption plays, auto sectors where there will be a larger impact of GST reduction, etc., can benefit. I would say as of now, the pharma sector is exempt from tarification. But I would say from a capital goods standpoint, the capital goods index is actually corrected by almost like 12 to 13% over the last 1 year. It has not performed. Then I think with the implication of roughly about 160,000 crores of tax revenue, equally divided between state and center, the GST reduction can have a trade-off for government allocation, and hence we think that infrastructure allocation, as we have seen in the past 6-7 years, might actually take a back seat, because we know that the tax revenues for the government, direct taxes, has started to contract, both personal and corporate tax, and GST collection will come down as well. So ability of the government to sustain a large capex on the infrastructure side will be limited, and hence all the industries that are linked to or dependent on government capex will also see a deceleration. So I think we need to be very careful about how we look at the markets going forward and the sectors that we are looking at.
Right, Mr. Sinha. In fact, thanks very much for your overall analysis. I'm Sumita, joining in from the Delhi studios as well. Let me come to you, Mr. Agarwal. In terms of a possible relief, what is it that you're factoring in as far as the U.S. government is concerned? Do you think that there's going to be a 90-day relief window that might be offered by Donald Trump to the Indian administration?
I think really that will really depend on how the negotiations happen. The concern that I have is there has not been a lot of negotiations or conversations that are going on. Maybe there's some back channel conversations, but nothing out there in the public which gives us the comfort that these negotiations are active negotiations at the senior level. And unless those type of negotiations happen where there is an expectation of a meaningful improvement, I'm not sure whether a 90 days sort of a window exists for India, because, remember, wherever those 90-day windows have been extended, it has been where a country like China could offer a rare earth. And then, so we have to say what are the options that India has in terms of what is India preventing from getting exported to US if those sort of windows were to be given to India. And at this stage, it's not quite obvious what that is. So therefore, I'm not quite as confident or as sanguine about that 90-day window.
All right. So as we wait, on what comes out of negotiations between India and the US on tariffs, Mr. Sahai, let me come to you. Diversification is the way to go, is the word that we have been getting from experts, and you track the export industry very closely. So now, which countries do you think Indian exporters should focus on as alternative markets to diversify their exports?
In fact, that will depend from product to product. We have to do a product matrix and then find out which could be the possible market. But the way India has signed some of the comprehensive economic partnership agreement, particularly with UAE and Australia, we have firmed up with the UK also, which needs to be ratified by the parliament. These can be the market where we should look into for further exploitation. New FTAs are also being negotiated. We are very hopeful that government may look into having an early harvest with the EU. If that happens, EU market is as big as the US market. That can be an alternative option. And probably the market in CIS is also getting open, with India's now forming up the terms of reference with Eurasian Economic Union consisting of Russia, Armenia, Belarus, Kyrgyzstan, and Kazakhstan. So my take would be that, of course, it will depend on the product, which could be a possible market. Since with the countries where we have the free trade agreement or we are going to sign the free trade agreement, India will have the tariff advantage also. And that may attract more importers to procure from India. That could be a possible market for all the products.
Right, Mr. Sai. In fact, the Indian government is looking at diversification to other geographies. At least 50 countries have been identified all across the globe for India's diversification drive. And we did hear yesterday from Maruti Suzuki on their diversification drive as well, in terms of the EV exports that will be made to other countries as well. But let me come to you, Mr. Sinha. The government is undertaking the GST rate rationalization exercise that will kick into effect possibly by around Diwali. But before that, what sort of an estimated impact that you see of these tariffs? Do you think that there's going to be pain for 3-4 months, or is this going to extend longer, given the fact that there is no visibility as far as India-US talks are concerned? The last round of talks, they were slated to happen on 25th of August. However, they are likely to get rescheduled now.
So I think there are various approaches people are applying on how things will get impacted in India. One is very simple, about looking at the bilateral trade between India and the US, and that's roughly about $90 billion, and 2/3 of that gets impacted. So people are deriving various sensitivity, etc. But I think it is multifaceted, because what happens, there are multiple other channels through which things get impacted. It is impacting capital flows, for instance. The FDI flows as percentage of GDP has actually fallen on a net basis. It is actually on a contractionary basis, contractionary side in the last few months. FII flows have also been very modest. So capital flows, then NRI flows and ECB flows, all of them, if you look at that, that has kind of reduced to 1/3 of what it was, let's say, 12 months back. It also impacts the other economies, because there are competing economies such as China and all, who also get impacted because of global tariffication, and there is an impact for Indian trade as well, and that impacts Indian I would say the trade and economy as well. So if you look at a simple thing from a historical perspective, if you look at 2019, when you had China-US tariffication war, India's GDP growth fell from, or decelerated from 6.5% to roughly about 3.5%. Sales growth of Indian companies and corporate performance actually decelerated quite a bit. And that time, India was not at the center of the tariffication thing. So at this juncture, it is very much there. So I would say that the impact can be quite significant. Importantly, with a multilateralism translating to bilateralism and more fragmentation, the trade volume growth will become very important. And for every 100 basis point decline in the global trade volume, the Indian GDP sensitivity is about 175 basis points. So net, I would say there are multiple aspects of impact. How corporate sentiment gets impacted, how they decide on investments, all of those have a fairly wide impact. So I would say that going forward, as far as India's demand is concerned, while the government is trying to do a lot of stimulus measures, I would say we need to weigh those against what will be the headwinds that will be translating from protectionism and tariffication. So I would say that we would expect a fairly modest growth as far as overall demand situation is concerned. As I mentioned, the top line growth of companies has averaged about 3.8%, 3.9% for non-finance companies in the first quarter. It might actually linger around this level as you go forward. So I would say that profit trajectory for Indian companies will be very tricky going forward. Till 2024, 5-year average was about 20%, and I would say last 5-quarter average is just about 5%. So I would say we are looking at a trajectory of a very modest profit growth. I think the sector rotation, etc., will be very important from an India standpoint. And as I said earlier, more domestic plays and consumption plays are going to be stealing the limelight going forward. I think it is already happening. People are moving from the outperforming banking and BFSI sector to autos and consumer sectors already. So I think that is the trajectory we are looking at.
Okay, so that's the word coming from Mr. Sinha. He says that profit trajectory is going to be tricky for a few quarters, and that domestic focus plays are going to be in the highlight, after tariffs kick in. And that's been the consensus that domestic plays is how we need to go forward. Mr. Agarwal, let me come to you now. Mr. Sinha was telling about how, it's going to take a few quarters for the tariff impact to show. But you did mention earlier that the boost that the domestic economy is getting in terms of the GST 2.0 reforms, they should be able to somewhat offset the tariff impact. So by when can we expect that to show in the financials of the companies?
Correct. That's a very interesting question. See, right now we don't even have the GST2 reforms. We know it is coming, and I think by Diwali they will come. And I think there is a lot of expectations getting built on top of that. Now, the interesting challenge would be what is then the expectations versus what the reforms do. So I think first question is expectations versus reality and how different they are. I think we have the timeline, which is around Diwali. So before Diwali, this will happen. So that's good. And then, of course, the follow-up is what are the other reforms that will come on top of the GST2 reforms? So obviously, GST2 reforms we have been discussing in the media for some time, but I think the government is also talking about a lot more additional reforms that might get kicked off. And very frankly, if those reforms does translate into some meaningful action, then the economy can really do well, because remember, more than 80% of India's GDP is domestic. And if we can have very strong reforms, then even though these exports and these tariffs are an issue in the short term, over the medium to long term, they may not have as much of an impact if the reform can create a lot more capacity for the Indian economy. And so I think that is why I am not as downbeat about this particular tariff if it allows us to do much bigger reforms which can boost the economy. And we don't have the answer to that question, unfortunately, because we don't know what the reforms will be.
Absolutely, Mr. Agarwal. We'll have to wait and see the kind of reform agenda that the government is going to unleash. Of course, one of the reforms was a GST rate rationalization announcement. It is yet to kick in. But of course, the government is looking at a whole host of measures that can be incorporated so that domestic consumption can be kept intact. On that point, let me come to you, Mr. Sahai, because with the United States and the European Union revisiting tariff structures under protectionist policies, what specific steps will FIEO take, or your organization take, to ensure India's exports they remain competitive?
In fact, we are asking the industry that we should be ready to face these kinds of protectionist measures, which is on the rise. This is not just an issue of few countries. Every country is protecting its stuff in some way or the other. We have to look into the alternative market where the market access may be available to the Indian exporter. We have to look into further value addition also. Those who are exporting, let us say, yarn, why not they go into manufacturing of the fabric? Those who are exporting fabric can look into manufacturing garments, because as you move up the value chain, the competition generally is lessened in upping of the value chain. So that can be one of the strategy. We have to look into the domestic market also. A lot of reforms are being taken by the government for making it more vibrative, and I'm pretty sure the GST reform which will be undertaken will definitely encourage many of the export sector to look into domestic market very closely. So these are some of the options which industry needs to look into in medium to long term. I think the challenges will be there in the short term, but probably we will be able to recover. Indian industry has been quite resilient in the past also.
All right. So, Mr. Sai, pharma is one of the sectors that has been in focus against the backdrop of these tariffs. While there are no tariffs in it now, Mr. Trump has stated that he would cut drug prices by 1,400 to 1,500% and impose higher tariffs on imported medicines in the U.S. Now, given India's significant exports to the US when it comes to pharma, how are you viewing this development, and what strategies do you believe can be adopted to mitigate the impact that's going to, happen once the tariffs kick in?
In fact, we are aware that he has already talked about 200% duty on India's pharma export and pharma export by other countries in general. In US, consumers are benefited with the very reasonable price of Indian pharma. And of course, we know that since he has already constituted a committee which is expected to give its report, pharma tariff may come. And that's why I'm pretty sure a lot of exporters are looking into the alternative market. In pharma, market access becomes a little challenging. It's a little time taking because every drug authority in the country takes its own time to register the particular drugs. And that's little challenging, but I think in many of the new markets, we have that kind of provision that if these drugs are registered in advanced economies of the US, EU, Canada, Australia, Japan, there is provision to provide these kind of market access within 3 months' time. I'm pretty sure with that new free trade agreement, that kind of clause will be there, which will facilitate the market access. I think over a period of time, Indian pharma should not be much concerned with that. We are very competitive, particularly when it comes to the generics. Indian industry is also moving up in pharma sectors also. And that is the sunrise sector. Probably the growth story will be intact, though there may be in the initial period some kind of hiccup in the industry. But that industry will be able to manage it. In the pharma sector, probably the US importers, retailers have a lot of margins also. So they maybe absorb the tariff to some extent as well.
Absolutely, Mr. Sahai. There is yet more clarity to come in as far as pharma sector is concerned. Semiconductor and electronic sectors also are at the moment exempt from these tariffs that have been announced by Donald Trump. But let me come to you, Mr. Sinha. In terms of market participation, should investors use this as a strategic buying opportunity? And you did mention about consumption as a theme. That will be big. But what else could investors look at?
So I think, in energy space, you have non-conventional energy, solar energy. A lot of activities are happening there. Companies are getting very aggressive out there. So this is again one space where there can be a significant opportunity. I think even in the e-commerce space, relating to the consumption theme, a lot of businesses can happen if there is a impetus on the consumption side. There is a possibility that e-commerce segment can get some impetus out there. So I think within the auto space also, I would say there is a possibility of the auto ancillary sectors which might actually benefit from lower tax rates. An important point that we are highlighting also is that post March 2026, the special duty the cess that has been applied for the compensation cess, for compensation bond that the government had issued in 2022-2023, that will also go. So, various commodities are attracting currently, especially the passenger cars, roughly about 20 to 23% tariffs, and the entry-level cars roughly about 15% and various other two-wheelers, etc., are also attracting certain amount of cess. So I think once 31st March is passed, I think there can be a certain additional relief that can happen beyond the GST relaxation, because the redemption of the compensation, the GST compensation bond would also happen. So I think that can be a benefit. Yeah.
Absolutely. So that will be a benefit that will provide perhaps some cushion to India's consumption story. But of course, all eyes are on what the government does next and how soon these talks can be restarted between the United States and India, or will investors and of course the government be looking at a 90-day relief window for India as well, as we saw in case of China as well. That remains to be seen. On that note, thank you very much, gentlemen, for joining us on this very special show on ET Now. Thanks very much for taking the time out.
पैसा लगाना है तो सेंचुरी प्राइम क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड मिनिमम